Hey traders, welcome back. Today is Monday, March the 21st, 2022, and this is our weekly trading preview for the week. I'm going to try to do a little bit better job this week and not just show my ugly mug, but actually show the screen as well. And hopefully that will be a little bit more insightful and a little bit more helpful for us this week. I do want to go over what we're working on this week and kind of our goals and where we're headed. A couple of things to think about here as we do get started. Looking at the weekly technicals that we look at in our trading room, we look at them on a daily basis. And on a daily basis, we are firmly above almost all of the key indicators, breaking through a triangle pattern, and it looks to be bullish. But on a weekly basis, we're back into that very dangerous zone of a neutral rating. The market tends to be a little schizophrenic, a little bit erratic when it gets those neutral ratings, and I would not anticipate anything different this week. So we'll see how the week plays out, but I think that we are trying to really solidify whether or not we can shift back to a bullish stance or if we retrace a little bit. Up 228 points versus where we were this time last week. That's a big move. That's a real big move. We'll look at the technicals here in just a second on the chart, my support resistance areas. But if you remember last week, I said that the pattern, the triangle pattern that we were forming was creating a sort of coiled spring effect, and that I was looking for, and I believe my direct quote was, over a 200-point move in the S&P, and that's certainly what we got. It was almost all to the upside moves as we looked at those over the week. But again, neutral rating on the market this week, that's always a little bit of a scary place to be. And so we tend to try to trade with a smaller position size when we have that going on. Here's the levels that I'm looking at for key support resistance. As you guys know, I try to trade levels rather than predict the future. We did have a breakout of that triangle pattern that you can see right there. The 200 plus point move that we had talked about, 200-day moving average. I use the ES, I use the futures contract rather than the SPX. On the futures contract, 200-day moving average is 44.65. So 44.65 is going to be a very critical level to look at. I'm looking at the futures right now as we get ready to open up. We're at about 44.48, down just slightly on the morning here, almost flat, if you will. But again, 200-day moving average on the ES is 44.65. That's going to be a real critical level. Above that would be very bullish, I believe. And then 43.70, and again, we're at about 44.50 right now. 43.70 would be that support level. So I'm looking at three numbers here as we start off the week. 44.65, 200-day moving average, very critical sort of demarcation point in the marketplace. Below 43.70 would be bearish for me. Above 44.90, that would be very bullish. 44.90 is where just above where the 200-day moving average is, and that would be the next level of resistance. So those are the areas that I'm looking at working on this week for key support resistance levels. You can see the 1 week heat map from last week, dramatically different than the previous week. Pretty much green across the board, except for energy giving back some of the gains that it had. We've almost just inverted everything here, where prior to this week, the previous week, obviously, almost everything was red and energy was green. So again, you got a little bit of sector rotation going on. We look at sector rotation on a month-to-month basis, and again, it really is healthcare that is the most beat up. We've got our schedule for the week's trading coming up here, and on Thursday, we're going to be looking at some cash secured puts with the wheel trade strategy. And I think that there's some opportunities in healthcare that we may be taking a look at as well. We look at the put to call ratio when it's above 1. In other words, when the ratio is above 1, when put volume exceeds call volume, or below 1 when call volume exceeds put volume. That's a good way to gauge market sentiment. We are still in that environment, a little bit better than what we were last week. You can see that it has dissipated a little bit, but we're still above that 1 figure. So a little bit more of a bearish slant here. We look at the option skew. And that has actually leveled out a little bit. If you looked at the previous week's option skew, all of the premium was on the put side. And you can see that that's balancing out a little bit now. That's good for us. That's incredibly helpful for us in our 0DTE trading, because it doesn't force us now to start with a put side when in fact that is going to be a weak leg. We never like to do that, but we've sort of been forced to do that as of late, simply because that's where the premium lies. So we've got a little bit more of a sort of symmetrical smile, if you will, in the volatility skew. And that's coming more into line. That's helpful for us as traders. We do look at the fear and greed sentiment reading. Again, it looks at stock momentum, stock price strength, stock price breadth, the put to call ratio that we just talked about, junk bond demand, the spread between junk bonds and investment grade bonds. Looks at the market volatility, looks at the VIX, and then safe haven demand, which is just the difference in pricing, or the divergence, if you will, between stocks and treasuries. And if we look at that, you can see that the top was last week, and this is where we are this week. So again, a little bit of fear being taken out of the marketplace. That can be good or bad, depending on how you want to look at that. There's not really, we haven't had this whole entire year from January to today, even though we've had a lot of volatility and a lot of downward movement, we haven't really had any capitulation in this marketplace. And so it'll be interesting to see if we can get some of that or not. My watch list for this week, I'm looking at a lot of stocks that have had good growth potential with them, good solid companies, if you will, that have been beat up quite a bit this week. I've got Alibaba, BABA, BABA, I've got NEO, I've got Planeteer, I've got Facebook, and I've got Cisco. They're all on my watch list for this week. All of these stocks have been beat up and starting to show on a technical basis some support for buying opportunities. So again, if you're a fan of the wheel trades, that might be a place to take a look and do your own research, see what you think. But that's what I'm kind of looking at. Monday's trading ideas. Today, obviously, we have the war headline risk that will persist through the rest of the week. We have some Fed speak going on today as well. We do have on our agenda for today a 0DTE index trade. We've got one that we carried over from Friday's session. Pretty rare for us to roll a 0DTE trade, not because we don't want to, but because usually we can't, meaning we can't get that trifecta. We can't roll it out, we can't make it safer by rolling it away, and we can't do it at a credit. If we can do all three of those things, then generally it does make sense to at least look at doing it, and that's what we did on Friday. We did roll it out. So we've got a 0DTE already working for today's expiration Monday that we did roll from Friday. We're going to reinitiate our IWM weekly credit strangle. We had another successful week with that last week. We booked our profits on that on Friday. And then we do have our 40Ts, our SPY and our Q, were carried over from last week as well. Tried to manage those as best as we could last week. We put them on Monday. We took them off on Wednesday prior to the Fed. And then we reapplied them, and then we even waited another day after that to apply our call legs to them. But we had such a spike in the marketplace, such a spike with quad witching on Friday and option expirations that it still necessitated rolling and adjusting those out. So we've already got those in place for today as well. So we'll look to be working all three of those, the 0DTE, the SPY, the Q. We'll be working the other side of that trade today, putting in the put legs on those trades. Potential bonus trades that I'm looking at today, probably going to be booking our profits on our soybean trade. It does have a little time to go in it still, but it's really solid, nice ROI on the trade. Probably going to be booking profits there. Probably going to be booking profits on our Canadian dollar trade as well. Again, has some time to go, and is at about a 70% capture rate, profit capture rate right now. So we'll probably take those profits today. For Tuesday, we've got some Fed speak coming out, more Fed speak on the agenda. On Tuesday for our bonus session, I've got 2 pairs trades that we're going to be looking at. So pairs trades, again, are where we short, we find 2 stocks that are very parallel in nature, the same industry, not always, but usually, and they move in a very tight synchronicity sort of pattern. And we short one, the overvalued one, presumably, and we buy one, the undervalued one, presumably, and we try to trade the convergence and divergence between those two. We've had some great success with that. We've done 10 of those so far this year. And knock on wood, we hope to continue the pattern that we have had. All 10 of them have been winners. Closed out our last one, Facebook and Charter, last week. And then, of course, on Tuesday, I will be spending all day long scalping live with the video stream in the scalping program. So if you're interested in scalping, you can check that out. But we'll be doing that as well. No real potential bonus trades that I'm looking for on Tuesday. Wednesday, we have crude oil inventory numbers coming out before the cash open, or just, excuse me, after the cash open, 8:30 a.m. Mountain Time, my time. And we usually look to put on an oil trade there, but we do have an oil trade already working. And so we'll see how that develops. And if we want to add to that or book profits on that or what we want to do. We've got Powell speaking. Chairman Powell is speaking, as well as some other Fed members speak that we're going to have going on Wednesday. So that could affect the market. Wednesday, of course, is another 0 DTE index day. And generally, we do an oil trade on Wednesdays as well. So we'll take a look at that for Wednesday. But that's our itinerary for Wednesday. No bonus trades right now scheduled for Wednesday. Thursday, we do have jobless claims number coming out an hour before the cash open. We got all of our softs that we trade, corn, wheat, and soybeans, as well as natural gas numbers coming out in the morning. And again, I'd like to we do have a nat gas trade going on. We do have a soybean, a wheat, and a corn trade going on. It would be nice to be able to book profits on all 4 of those before these numbers come out, but we want to get a good capture rate on those just so that we get the best ROI potential. So we'll see what those look like. Our core trading ideas for this coming Thursday, we do have 2 new wheel trades. Now we'll look at the healthcare sector. Got quite a big list here of things that I think would be good wheel trades for us, things that are quality companies, in some cases having 40% growth, looking at a couple of opportunities for companies that have had 40% year-over-year growth that looks fairly sustainable, but they've been beaten down quite a bit in this first quarter of the year. And so we'll be looking at adding a couple of wheel trades on Thursday. Scalping all day long in the live Zoom feed. If you're interested in scalping or watching me scalp all day, that's a good place to go. And I'll give you the link here at the end of the day. Thursday, bonus trade. I am looking at doing a 1 DTE overnight index trade, and it will most likely be a broken wing butterfly, but we'll just have to see how the pricing action for the week develops as time goes by through the week. That's our agenda for Thursday. For Friday, we've got the University of Michigan Sentiment Index coming out. We've got some Fed speak going on as well. Those are all potentially market-moving items. And then, of course, Friday is a 0 DTE day, so we'll be, again, trading the 0 DTE strategy on Friday. That's the focus that we'll have, so probably no bonus trades that day, other than maybe an opportunity to double dip on the 0 DTE. We've had some pretty good success with the implied volatility that the market has had lately. We've been able to turn our 0 DTE trades a little quicker, and that gives us the opportunity to double dip and maybe take a couple bites of the apple on each one of these Monday, Wednesday, and Friday sessions. So we'll take a look at that and see where it goes. Just some track records here to look at to keep you updated. Our 0 DTE year-to-date results. We've had 33 days of opportunities to trade the 0 DTE strategy. And during that time frame, we've done 52 total trades. So again, quite often we get the opportunity to double or triple dip on those days. We've had 49 winners and 2 losers. We do have our current zero DT, as I mentioned, from Friday that we've rolled to today. So we'll be working on that today. Our 40 ETE, SPY, and Q trades, we've had 62. This is since inception, back almost a year and a half, 2 years, I guess now. But 62 wins and 5 losses over that time frame that we've done. We do have both a SPY and a Q that we rolled from Friday that we're working on today as well. Our IWM weekly credit strangles, if you go to the start of this year, we've had 11 trade opportunities there, and thankfully 11 total trades. We've been able to trade each and every week. Sometimes the market volatility is such that it just doesn't make sense to do an undefined risk trade, a credit strangle. But so far this year, we've been able to feel comfortable enough to put them on each week. All of them have been winners so far, 11 winners, no losers on those trades. Pairs trades years to date, we've had 10 of them so far. And like I mentioned, we did just finally close out one that was our Facebook and our charter pair trade that had been lingering for a little bit. We've been averaging about a 10% or so return on these. Our Facebook and charter one was a smaller one. It was about 2%, just a little bit better than 2%. But we were able to finally adjust that into a winning position and get out. So 10 winners, no losers there. Our bear market trades, we're diligently looking for some bear market trades. And again, I need to get off my butt and get the spreadsheet filled out. But it has been, I would say, probably our most successful strategy. We've got about a 3.5-year track record here of almost every trade being a winner. Only 3 losers in 3.5 years, and really good ROI if you annualize the returns on those. But they are a little bit harder to find, and they can be a little bit more expensive trades in terms of how much money we have to put into them. But that's where we're at so far. I did not get everything done, as I mentioned last week for you guys, in terms of getting everything uploaded. So we're going to upload that here today to the bonus training channel in our Discord chat room. I do have the order flow and footprint chart training manual that I'll be uploading today. And then also the rules for scalping using VWAP. I'm going to get that uploaded today as well. So look for that in the bonus trading channel. And then, as always, love to connect with you guys. If you're not subscribed to the YouTube channel, if you haven't clicked the notification bell to be notified when we put up new material, I would encourage you to do so. All of that material that we put up, training material, is specific to the trades and the style of trading that we do inside of the trading rooms. And so, again, I think it would be helpful for you to realize. I get questions all the time about this or that, and I say, did you watch the training video that I just put up on that very subject? And 9 times out of 10, the answer is no. So if you make sure that your notifications are turned on, you'll be able to see those when they're posted. Love to interact with you on Twitter. That's at Theta Seller, and you can always DM me there. That's an easy way to get a hold of me. One-on-one Zoom sessions, if you need to talk to me one-on-one in a 30-minute Zoom session, you can do that for free. It's at calendly.com/Theta Seller. Personal email. I do have a personal email that you can use. It comes right to me. We can chat there as well. And then the 3 trading programs that we have, it's the Asymmetric Trading System, the AST program, which is just an automated asset allocation portfolio. You can check that out for 2 weeks for free. If you click that link, or copy and paste that link, I guess, better way to put it. Our live trading room, live 0DTE trading room, you can check that out for 1 free week's trial as well. And we do have the live scalping feed that we trade every Tuesday and Thursday, if you're interested in checking that out. So again, as always, guys, I appreciate you guys. I do appreciate all of the input that you guys get. I appreciate when you guys comment on the YouTube videos and DM me with questions and things like that. The more interaction I think we have as traders, the better we all are. So I appreciate you guys. I hope you have a good, safe trading week this week, and we'll be talking to you as the week progresses.